Things are going from bad to worse for the U.S. financial system as it slides ever closer to recession. As bearish signals mount up, the Federal Reserve found itself needing to step in again to attempt to rescue what is becoming an increasingly desperate situation. In its second cut in as many months, the Fed lowered interest rates by 0.25% yesterday. According to reports, the central bank said it was prepared to move aggressively if the U.S. economy showed additional signs of weakening. It added that a growing number of officials expect there to be further cuts before the year is out. Fed Chair Jerome H. Powell painted a gloomy outlook. U.S. President Trump wants more extreme measures, including a possible interest cut into negative territory. In this scenario, people with any money in the bank will have to pay the bank to keep it there. This dire situation comes about when the central bank keeps printing money until it becomes next to worthless. Following the first round of bailouts earlier this week, the New York branch of the Federal Reserve pumped a further $75 billion into the system. The objective is to pump money into the system in order to keep borrowing costs from creeping above its target range. The central bank has been scrambling to reduce excess reserves as it floods the markets with money. According to Fed data, those reserves have fallen by $171 billion so far this year. This epic figure equates to the market capitalization of Bitcoin, which is currently around $175 billion following today's slump. Economist John Adams posed the question. TD Securities head of global rate strategy Priya Misra noted that reserves have been falling since 2014 and they are expected to continue. According to The Street, the U.S. budget deficit has topped the $1 trillion for the second time this year. In what appears to be a vicious circle of borrowing and pumping money into the system, painful memories of 2008 are starting to flood back, and safe haven assets such as Bitcoin could become the key to survival.